late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump into the charts. We do have a lot of news that's going to come out today. It is the Liberation Day, as they're calling it. Essentially, later on today, we're going to have Trump and the U.S. administration come out and outline their entire kind of guidelines for these tariffs that they're talking about. So we're going to have a lot of volatility in the markets today. So we're going to take a look at the charts, kind of more on the higher time frame, get a look at everything. We'll also take a look at the 4-hour and some of the lower time frames as well. That being said, we don't like to overtrade around these volatile events like this. We're just going to wait and see what we get from the administration, and then we're going to figure out how we best position ourselves for the move after that fact. So we're going to jump over to the charts here. Starting on the dollar here on our macro side of things. So essentially just seeing that the bearish momentum on the dollar is starting to pick up here. We had our bearish cross of the RSI after kind of getting rejected right through here. We haven't quite seen the same amount of buying that we did over here. So when we see this gold bar flash on this indicator, that signals that big money is accumulating in larger amounts. So really watching for that as a potential accumulation signal. We see over here that our DMI minus line looks like it's trying to bounce off the ADX line. We see our vortex indicator minus line also just with that upwards momentum signaling likely bearish momentum on the 3-day chart here. We can take a look at the 4-hour and see kind of how it compares. Yeah, same thing that we're kind of seeing here. We've got that bearish momentum building on the low time frame. So we've got the bearish cross right through here. We see the bearish setup coming here. We don't quite have that confirmed cross, but we see the momentum building with that negative line heading above that that positive line. Same thing here, bearish cross of the MACD, bearish cross of the RSI. No buyers showing up on the low time frame. So to me, the dollar looks like it's likely to break down, hopefully, and ideally that's what we want to see for our risk on assets. As I've said before, we need the dollar to be in a downtrend. So we did break out of this bearish wedge, but we can see we were in uptrend structure up to here, and then this is where we lost it. Bearish engulfing candle, downwards price action, another bearish engulfing candle, and we've just been consolidating since. So the dollar really is kind of just in this no man's land again for now. You know, we've broken out of the bearish pattern, but we're kind of resuming that downtrending price action. We're still stuck under our key moving averages that signal the macro trend. So until we can get above those, we're still just going to assume that we're due for more consolidation, more choppy price action, especially with how much volatility and uncertainty there is in the market right now. I'm not surprised to see the dollar chopping like this. People are really trying to figure out how to position themselves around these tariffs. We're going to flip over to the US 10-year. We see that breaking down. So we saw we were following it up through here. We broke out, ultimately losing the 50-day moving average here, coming back into this wedge, ultimately losing the wedge. We're now stuck underneath it. So we're going to likely continue that move to the downside and ideally continue that move to the downside. Let's take a look at our Fibonacci here from the low to the high. You know, looking for that potential target in the 618 to 786 zone down here as a near-term target for the 10-year. We can look at the VIX. This is one I pointed out. We're continuing to trend up here. So we had this big spike up into this resistance zone on the VIX that I pointed out. If we get above this 30 VIX, you know, that's that warning signal. Generally, the markets do not act well when we see volatility spiking like this. But we are, so we've got those higher lows. We're holding above the moving averages in uptrend structure. So we see that 50-day above the 200-day with price well above the 50-day, and that 50-day starting to curl up. So this is holding all major moving averages as support. It's holding uptrending structure on the high time frame. And so for now, we're going to assume that volatility could continue to increase. Ideally, though, we want to see it break down, come back to these lower levels. That's what the market's like a little bit more. We're going to flip to the SPY here. We're going to look on the weekly, and then we're going to take a look at the daily and then the 4-hour, looking at all our momentum indicators. So we see that kind of divergence between the vortex indicator lines here opening up again, signaling the bearish momentum is the favored momentum right here, kind of confirming that on our directional movement index on the weekly here. We see that curled up as well. MACD well oversold here, that histogram flipping from dark red to light red. So we should try to see at least a little bit of a kind of near-term bottom start to form here. That being said, you know that the MACD and the RSI are lagging indicators, and we can remain oversold or overbought for extended periods of time. So this could trigger, and then we could still bleed another 5% and still be in that oversold territory. So just paying attention to that. We do see a little bit of a bullish cross on the RSI with that higher low. So we're going to continue following this. You know, it could just reject as well, though. There are different instances where we poke above and then come back down, just like over here on this prior peak. So paying attention to that. We have not seen the buyer step in on the high time frame like we did over here. So that's another thing to note. That's that big money buy indicator that I talk about. Watching for gold bars to flash for that signal. Let's take a look at the daily, see if we have any difference here on the indicator. So the daily is looking a little bit better. We see that bullish momentum increasing here, heading towards that bullish cross. RSI with a bearish cross. MACD looks like it's bouncing off here. So ideally what we need to see is that continued bullish price momentum, and then we'll start to see that MACD continue to bounce and head up, and maybe we'll start to see the RSI bounce from here and then head back upwards. Again though, we're not seeing any buyers stepping in on the daily as per our big money buy indicator. We can flip to the 4-hour. So what I'm trying to do essentially is just get a good idea of each time frame. So I'm looking at the low time frame, the medium time frame, and the high time frame. We see on the very low time frame that bearish momentum is kind of favored. We did have that bearish cross of the RSI. We have the negative vortex indicator line angled upwards, and we have that negative DMI line. It did top out here, but it looks like it's curling back over. We'll probably get another little leg up in the DMI, and then we'll zoom in to our MACD. It looks like it's kind of rejecting here, so you see it curling back over. We need to see that breaking out for confirmation. What we did get back here though is that single gold bar flashing, so we did see some buying from some bigger entities back here, so good to see. We see volume actually increasing right here, so I like to see that as well. But kind of just looking at it from the broad perspective, we're more overbought than oversold, in my opinion, when you're looking at multiple time frames. So due to the current price action, you know, not interested really in taking a position, but we'll take a look here. I'm going to show you just the higher time frame, or slightly higher time frame. Let's take a look at the 3-day. I just want to show you the trend that we're following and the likely entry that we're hopefully going to get. So we see this trend starting in 2020 during COVID, acting as support in through here, acting as support kind of right through here, and then acting as support here. So basically what we're going to aim for is that same trend line. You can see here I've marked a Fibonacci retracement. We can see that 618 coinciding perfectly with that upsloping trend line. And then we also see our 200-week moving average, which has acted as really good historical support over the years, coming in that Fibonacci golden zone. So looking to accumulate the SPY down here in that kind of sub 490 area is going to be really good value for the SPY, in my opinion. If we take a look here, I'm going to show you this prior extension. So from that low to that high, we had a Fibonacci retracement of 0.5. So what I'm looking at right now, I have that Fibonacci marked over here. Sorry about that. I already had it marked. But you see right here, we've already got it marked from this low to the high of the trend. And you see that 0.5 Fibonacci coming in at about 510 here. So this is going to be where I'm going to potentially start to layer into the SPY. You know, I'm taking it a little bit easier at the start here because this is a higher risk level. And then ultimately looking to add larger buys down in through this larger Fibonacci retracement. I then think we're going to be in those lower risk levels for the SPY that make a lot more sense to be dynamic DCAing. So paying attention to this area all through here. You can see on the 3-day chart we've got order blocks sitting right at these levels of interest. So look at that, all that confluence. You know, we've got upsloping trend lines, we've got moving averages, we've got Fibonacci levels, we've got horizontal support. If you look back to here, that prior high, horizontal support, and we've got order block support as well. So lots of confluence of support in this area. Definitely looking to take advantage. At least if we can get this, I think we get a bit of a bounce play in the least up to higher targets. Even if it's a lower macro high, it could be still a great swing trading opportunity. We're going to flip over to the NASDAQ. So all these kind of look pretty similar, you know, breaking trend like we did over here. That's what we're seeing here. So that's why we're a little bit cognizant and a little bit we're a little bit cautious. So we're cautiously optimistic in this market. Currently, I'm more cautious than optimistic. If the charts change, then I will change my stance. But for now, everything is just kind of in this downtrending price action, consolidating, not looking the best, stuck under key moving averages. So yeah, watching for those potential higher retracements. If we come back to this 200-week moving average with confluence of the 618 Fibonacci level, it's going to be a good opportunity to buy the NASDAQ, in my opinion. IWM here, bouncing from the 200-week moving average so far, but we're still in that downtrending falling knife price action. Nothing really too exciting going on here. Stuck under resistance, so we'll see what happens. We really want to see some strength from the IWM playing catch up to the SPY and the NASDAQ for us to be able to hopefully go on another leg. If we continue to see the IWM breaking down under key support and key levels, showing more weakness than the NASDAQ or the SPY, that kind of reinforces the recessionary narrative, in my opinion, because the small cap stocks, which is the IWM, so the majority of the stock market, not including value, just talking about pure like amount of companies, the IWM is a better representation because it includes all those small cap stocks that are more affected by recessionary forces. You know, the Mag 7 stocks, while a recession is going to hurt their bottom line, they're going to come out the other side just fine. They're going to continue to gain market share. There's really no competition for some of those companies. So obviously during the recession, small people, retail, consumers, they're hurt the most, and then the bigger companies, they do fine. They come out the other side just fine. So we're continue to use the IWM as a warning signal if we see that relative weakness. Otherwise, if we start to see relative strength from the IWM playing that catch up, you know, that might be a signal that markets are looking to get a little bit of a relief bounce, in which case we could look to position ourselves, but the charts will tell us when that is the case. We wait for confirmation. TLT here, again, we had this downtrending pattern here, and then in this wedge breaking out, we're looking at a similar pattern over here. Broke out of the downtrend. We're holding this wedge for now. We're above our 50-day moving average, holding it as support coming into the 200-day. What I want to see is that break of the 200-day, holding it as support, and then I think we can continue up to at least this first target here, which has acted as prior resistance. And then you can also see, I bet if we zoom in a little bit here, that this was also prior support. So we see right here, this acted as support through here. That's a support resistance flip, or an SR flip, where we previously had this as support. You know, we broke down and now it acts as high time frame resistance. So we need to get above that 200-day, hold it as support, and then we can continue up to this 200 mark here. But our TLT position still looking good, still holding it. Gold here continues its run up. So again, gold's just on this massive uptrend, breaking 3,100. Silver also up today, oil up today, natural gas up, and copper up. So when we see a lot of these assets really rising, we see oil going up here, bouncing from the lows, getting above that 50-day moving average. We see nat gas basically at highs here. Not quite the highs, but pretty high in this range for the last couple years. And then we see copper also at elevated levels up here. That kind of doesn't help the inflationary aspect of things. When we see oil and we see natural gas, the things that people use to heat their homes, they're using the oil to get to and from work. When we see prices like this, it kind of causes that inflationary pressures on other assets. So we need to continue paying attention to that. But in terms of the macro, you know, we're still stuck under those levels. We still don't have confirmation on the high time frame, and it's just not enough certainty to be willing to take any major positions right now. We're holding what we have, and then we're just monitoring our risk on, risk off signals. We're going to flip over to some stocks here really quick. Take a look at GDX. So GDX continues on this breakout. These gold miners, sorry, it's a little bit of an eye chart. I'll get rid of a lot of the drawings there. But we see continuing that breakout uptrend structure. GDX looks just fine. Take a look at the momentum indicators. We aren't getting quite the buys over here. That being said, we've already left the station on this run. I'm not surprised to not really see any buyers right there. We starting to see a little bit of the bearish momentum picking up here on the 3-day. We can flip to the 1-day, get a little bit better idea. Also, same thing, we're seeing that bullish momentum losing a little bit here. Same thing that we saw. We're looking like a bearish cross of the MACD. RSI stuck down here with room to go down, and that negative vortex indicator line heading up towards the positive line, signaling that the trend in the near term might be slowing down. So we'll see what happens with the gold miners. We're going to take a look at Tesla really quick. Tesla looking here like that bearish momentum on the daily is building a little bit here. We are seeing, look, that bearish cross of the RSI after a lower high. We see our MACD curling over. We're seeing that negative DMI line bouncing from the positive line, curling up. And then right here, we're starting to see the vortex indicator lines converging as well. So if we continue to see that playing out, that's that more bearish narrative. That being said, when looking at the chart, Tesla actually looks a little bit better than some of its peers. I'll just get rid of this here. Essentially what we've seen, we've got these two trend lines that we're facing as resistance. We've got this downsloping trend line here, and then we've got this lower time frame downsloping trend line here. So this one is currently acting as support, and this one is acting as resistance. We've broken out. We're holding our lows. We're in uptrend price action for now on the higher time frame. We need to continue holding these lows and put in those new highs. We are still stuck under these key resistance levels. So just looking at Tesla right now, you know, from that indicator standpoint, we'll flip to the 4-hour and see how it looks on the lower time frame. So yeah, that bearish momentum building on the 4-hour. I think Tesla has more consolidation to do. We could even come back and just kind of grind along this trend line, retag these lows before going back up. You know, this is a better entry for Tesla. If you can get in around 220, there is a few different fair value estimates anywhere. So they kind of go anywhere from about $60 up to $210 were the different ones that I've found. You know, I did find a decent analysis that had a estimated fair value of Tesla at $210 per share. So I'm more interested down here at these levels. That being said, if we come back here, we need to make sure that we're holding high time frame uptrend structure. So when we look at the weekly chart, that's when we get rid of a lot of the noise. So right here, we've only got one higher high and one higher low on the weekly right now. What we need is that second higher high and then subsequent higher low, and then looking to enter on that confirmation with the momentum indicators backing that thesis. So what we would see essentially is another push to those higher highs. Maybe we tag our moving average right here, the 50-day, and then we're going to come back and end up retesting there before actually getting that break move. The fact that I would way rather wait for another higher high and higher low, because that's more of a confirmation of that trend, and then entering right here slightly higher than the current price. But even though the entry is very similar, the risk is substantially lower if this technical setup is there. So that's what I'm going to do. I'm just going to wait. You know, I have said, though, under $250 is a decent DCA area for Tesla. Under $200 is my target range. 175 to 200 is where I want to start buying more, kind of on a higher, on a larger basis. But also looking at 220, 210, those are also decent options to add to your Tesla position if that's within your risk profile. Taking a look at NVIDIA really quickly here. We're just stuck in this wedge here coming downwards. Take a look at our indicators. Yeah, we're seeing bearish momentum on the very high time frame, and then I'll flip to the 4-hour and see what we're looking at on that time frame. Same thing, bearish momentum, really nothing to write home about. We are in that downtrending price action. See lower highs, lower lows. Let's just wait and see, wait for the confirmation, the change of trend supported by our indicators, and then we'll get in that and we'll ride it to the upside. Looking at Dell here, so a few other companies. Dell holding the lows really well, actually. So we've got a double bottom potential scenario right here. What we're going to watch for is is that higher high uptrend structure that we want to see. Looking like a slightly better setup, building a little bit of bullish momentum on the DMI, the MACD as well. The RSI though kind of looks like it's curling over, could be topping. So I do think more consolidation. We're not quite ready to enter a position yet, not with the way the current stock market indices look, but really good to see Dell holding these lows. That's what I want to see. It's the first step in that bottoming process. So moving on to AMD. Another one that we're watching for that potential accumulation. This is what I drew, so pretty much following exactly that path so far. We do see a little bit more, not quite as bullish of momentum as the previous one there as Dell, but we can see that the MACD is coming and starting to curl over, and the RSI has come down. It's putting in higher lows, but we still don't think we're bottomed yet. This is that bear flag structure, so we're just going to continue following this for now. If we take a look at it on the weekly, that's what I say. We want to find confirmation of these trends on the weekly charts. Ideally, that's going to be the strongest kind of confirmation we can get. So right now we've got a higher high, and we've got a higher low here. So we've only got one higher low on the weekly. This high didn't actually take out this prior high over here. So right now we're waiting for a subsequent higher high and higher low. That would be our first technical confirmation on the weekly chart. And then assuming our indicators can support that move, it could be an option there. Looking at Tempest AI, this is that Nancy Pelosi stock we talked about. We can see it bouncing from this heavy level of support, which was also a Fibonacci 786 retracement. Take a look at our momentum indicators. We have that bearish, kind of more favored bearish momentum on the vortex here, but we also see on the directional movement that bearish momentum is kind of starting to slow down. So might see a little bit of bullish momentum gaining here on the DMI. We see the MACD is headed to kind of more oversold territory with the red histogram flipping to light red, and we see an incoming bullish cross on the RSI. So Tempest AI is actually an interesting one here. We see pretty much we put in that higher highs, higher lows. We're holding right here. If we take a look at this indicator here, our big money buy indicator, we do see that it has flashed a gold bar in this range. So we could, similar to what we saw back over here in this consolidation range. So once we saw that actually flash the prior time from this low here, we saw it price move up 170%. That was right around Nancy Pelosi's buy there. So paying attention, this could offer a decent swing trade opportunity. I am continuing to watch this. We take a look at it on the very low time frame to get a better idea. So we're starting to see that bullish momentum building a little bit. We did have a buyer on the 1 hour chart here. We got our bullish cross, and we have our MACD bouncing off there. So looking for that, maybe if we can see some strength, some continued strength, if we can get above that 50-day moving average, and then maybe look at a position in Tempest. And then other than that, I'll take a quick look at PayPal as well. PayPal is one that I did have a member ask me about in Telegram. So we did see it was kind of in this falling knife status here. Flip to the very high time frame. Yeah, essentially what we saw is just, up here, just in this downtrend, holding this trend line as support for now. So good to see that. Sorry about that. Get rid of that. Move that. Yeah, so we have this trend line right through here. We're getting our bearish cross of the 5200-day moving average. That being said, that's typically when a lot of the times we get a relief rally back into these moving averages. So we could see a pump up to the mid-70s for PayPal. That being said, I'm not really interested in this kind of pump right now. I want to be sure that we're actually going to reverse. This is a lot of selling volume in through here, and we haven't really seen any buyers step in to a major extent yet on PayPal. Let's take a look at the 4-hour indicators. We'll take a look at the daily here at the buying indicators. Gives a little bit of a better example. So we actually did see a lot of buyers stepping in here on the daily in this range, but we also see the bullish momentum kind of waning here, curling back over. Same with the MACD. So yeah, nothing too interesting. We're still stuck in downtrending price action. If we can start to reverse this to the upside, it might look a little bit more interesting. Looking at BABA here, BABA is another one that I'm interested in potentially building a position position in. I'm more interested down here, sub 125, and then all the way down to $95 is where I'd want to build that position. This is kind of what I drew previously, so playing out pretty similarly. This bearish rising wedge pattern, breaking down, back testing, getting rejected, and ultimately coming back to lower targets, so not rushing into anything there. Intel, another one that we're watching. So currently looking at a position in Intel. I have a very small position. I think I might potentially add a little bit. Just let's take a look at our momentum indicators here. So we see looking a little bit better on the daily, not amazing, but we take a look at the 4-hour. We did get some buyers stepping in here. We're just in this kind of consolidation pattern, so we're also losing a little bit of bullish momentum. I'm going to add to my Intel position just a DCA buy. So when I take these swing trades, I'm not going all in on a single buy. Essentially, I'm just going to layer myself in. So I bought a little bit at the 200-day moving average, a little bit more aggressive. So I did kind of make a note that this was a more aggressive entry. We did get that bounce initially, but it wasn't sustainable. That being said, looking at another supplemental entry, so just another small DCA entry into here, with the stop loss below support. I'm going to have my stop loss below this support for now, so entering with a stop loss at $19 for now. If we drop there, I'm going to have to cut that position and reevaluate. So watching Intel going forward. Another one that I'm just interested in kind of building a position in. Looking at Bidu here, this is one that I've recently just brought my attention to. It's a pretty interesting chart. If we look at it on the very high time frame, it's at pretty insanely low valuations currently. It is the largest search engine provider in China. They have a 50% market share in terms of the search engine. They've also got an autonomous robo-taxi service, and they're expanding their markets into Dubai as well. So they kind of have this AI cloud side of the business. They've got the search engine side of the business, and they've got this autonomous robo-taxi side of the business as well. So it's a really interesting company here. The valuation is pretty cheap. I'm going to do a little deep dive on them, but just recognizing we did get a bullish cross of the 50 and 200-day moving average. We're in uptrending price action on the weekly. We take a look at our momentum indicators. Look at all this buying here on the weekly in this company, guys, and then we see bullish momentum or bearish momentum kind of waning here. So this is one, I'm going to do a deep dive on this. Maybe that's what I'll do for tomorrow's video. We'll take a look at this company, how it's valued, and then the technicals behind it. But that's pretty much all I want to talk about today. Kind of mixed reactions across the board. Take a look at crypto. We see Bitcoin up a little bit. Bitcoin dominance pumping here. Ethereum, Bitcoin, Ethereum USD, Total 3, and others dominance all down today. Kind of continuing their downtrending price action, their chop solidation. So not interested in taking positions. There's too much uncertainty out there. We're going to wait and see what Trump and the administration say today. Wait to see what the charts say in the kind of coming days, how the market digests that news, and then we're going to look for those positions, those setups as they come. So thank you so much for watching, guys. If you like the content, please like, share, and subscribe. It all means the world to me, and I'll see you in the next one.